What's up, Explorers? It's Ryan Couvert, the producer of the Explor Show. In this week's episode, we took a clip from Jason Dillard's podcast. Jason is a real estate exchanger, and in this episode, he talks about how he got started in exchanging paper, buying paper, selling paper, trading paper, all things real estate. Jason's on Twitter. You can follow him there, and let's get to the show.
Where did you start? So when you got into exchanging paper and doing the creative financing world, how did you start, I guess? Were you going after people that were looking for maybe 1031 type exchanges that had some tax problems, or what was your main focus getting into it?
Well, as far as when I first started learning how to do what I do now, I went to marketing sessions. I went to equity marketing sessions. And I host one here in Greenville, South Carolina. You can go and Google equity marketing sessions and find where there may be some smaller ones that are hosted all over the country. There's a national group in Vegas called NCE, and it takes multiple meetings to understand what goes on in those meetings. But those strategies that we're talking about, you'll see those happening in the room. Those things that are the offers that I'm making outside the room, I learned how to make them in the room. And again, if I go to one of these probably once a month at least, and you just keep learning more and more and more and more ways to get transactions done that you would have never thought of before, because I'm not that smart. I'm just specialized. There's nothing special about what I can do. I've just focused on learning how to do it.
Yeah. What catalyzed the transition? So what got you interested in doing this versus your traditional landlord? I'm going to go buy single family houses and be a landlord and buy a few homes residential a year or get into small multifamily. So what catalyzed the transition? And then what do you believe are the top advantages of creative financing over maybe traditional conventional methods?
Well, the first question is, I don't want to be a landlord unless it's multifamily and somebody else is managing it for me.
Hey, that makes sense.
I've done that, and I'm not good at it. Any of our single family, we seller finance. So I bought and sold probably 1,000 single family houses.
Wow.
And almost all of them we seller finance to sell them. And none of them we use banks. And so I'm only limited by the number of leads I can generate. I'm not limited by the amount of money that's in my bank account or by my line of credit that I have at this bank or that bank. I'm limited by the number of leads I can generate and the number of offers I can make, because you still have to make a ton of offers to get one accepted. Just like if you're trying to steal a deal. In the beginning, if I had to, 70% minus repairs minus my assignment fee, and I made 50 offers to get one, and then I would have signed a contract, make some money. That's kind of the beginning of most real estate investors' world, right? But I still took a ton of offers and a ton of leads to get to those offers. So same thing, we're generating leads, and most of the time we're doing it with social media now. Like that deal that I just mentioned, all it was somebody on Facebook or something that wants to get rid of a house.
Wow.
And there is a way to buy almost every piece of real estate with creative financing. Now, whether the seller will do it or not, we don't know until you make the offer. But we try not to make an offer until we've asked 20 questions, 30 questions to find out why the seller is selling. What's motivated to sell? If it's a listed property, it's a problem property.
Interesting.
I mean, why would it be listed if it wasn't a problem?
True.
Well, the house you live in, do you like it? If you didn't, you'd have it listed, you'd be moving.
Yeah.
Every property is a problem property. Now, if it's listed for the fun of it, just hoping maybe you can get
a certain number
as much for it it's really worth, maybe. But
we've got some of those sellers out there right now, especially still thinking it's 2021 prices and a little bit out of touch with reality.
Oh, and our phone's ringing off the hook now because we
I
can
bet
pay
they
the
are.
21 price. We can
What
pay
allows
that.
you guys? Let's get into that a little bit. So you guys will pay essentially overpay quotes for a property, or just pay what individuals are wanting. So are you making the spread on what they'll finance it to you for and what today's rates are, or how do you profit off of that? How do you get money in your pocket there?
It depends. So if you've got, let's say somebody's got a house that's worth $1 million and it's really only worth 900, we might go ahead and let's say that they're making 40 grand a year because of their cash flows. Well, we'll just say, well, can we exchange you into this that makes 45 grand a year? Give you a raise. Can you own this instead of that? We'll master lease it. We'll make you make 45 a year. But see, in our mind, we know that we can borrow or trade or go to cash with what they sold us. That'll generate the money to pay off where we put them, to do whatever. Because we're playing chess.
Mm-hmm.
We're their asset maybe they're only making 45 a year because they've got a $500,000 note that's got a really high loan constant, and it's eating up all their cash flow. And they're tired of dealing with it anyway. Well, we can trade them into a $500,000 fill in the blank, pay them a little bit more a year than they're making now, but then we control that asset. We have their asset. So we're exchangers. So we'll take theirs, and they'll take ours, and then we'll take care of it for them and give them some return, and then buy it back later. And we'll take theirs, and we'll do something with theirs that's going to increase the value, and then we'll exchange it up. So or we won't just sell it quick.
It's just a constant play of moving assets then for you.
Never ends. Never ends.
It's like a puzzle.
As we own it, we looking to trade it. And if we're not, if it's a keeper for us, it's kind of off to the side and it pays my living expenses. It's over there, and I try to forget I own it, and we try not to think about it.
Isn't that a good problem to have when you start forgetting properties that you own? That's a good problem.
I had a lady call me today. She calls and says, "Do you own this property over on such and such street?" And I'm like, "No." "Well, yeah, we do own it, but it's sold." "What do you mean?" "Well, I bought it like 20 years ago, and the family had been living there." "Well, it's in a trust and it's got your name on it." "Well, yeah, I do own it, but I don't." And she's like, "Well, they called and they want me to list it." And I said, "Well, list it. It's their house, but it's really not their house." See, I seller financed it so long ago that the family living there has got equity, and it sounds like I'm about to get paid off in a couple of months. But I don't think about it, because you buy it, fix it up, you seller finance it, and maybe I've got an underlying loan, maybe I don't, and payments just come in, and it's just an income stream. So now what I'm thinking is, I think they owe me about 80 grand. I'd rather not have the 80 grand. 80 grand is bad. Cash is bad. Terrible. Don't want cash. Cash goes down in value. Cash loses. It's stinky. It's nasty. It's filthy. It's festering nastiness. If I can give my house to you the day before somebody buys it for 80, well, I'll just let you have the cash and I'll take what you gave me. So we'll start making offers with that house and try to own the house before it turns into cash. Because it's on my balance sheet. I can exchange it. And it's low. It's got a low basis because I've owned it a long time. Why would I want cash when the government going to take a piece of it? I mean, do you like sending money up to DC?
No, I don't think any of us do.
No. So
I send what I do owe, but I always, it hurts every time.
Yeah. I mean, I had a year one time where the CPA called me and said, "Y'all had a real good year. You're going to owe all this money." And I'm like, "Well, where is it? We don't have any money in the bank." And they go, well, you owe it. You had a great year. And I didn't know that you had to make money to pay off stuff. So I was being smart, paying off stuff. And we paid off a handful of houses and didn't have the money to pay the tax.
Isn't that crazy?
Go refinance some houses just to pay the tax. And then I realized that a bunch of our payments were a bunch of principal, which is taxable. You know, principal in your payment is taxed.
Yep.
We refinanced everything to interest only that we could and started losing money from then on. So I hadn't made any money since then.
It's all just a game.
We make cash flow.
Yep.
But we do our best to continue pushing out our taxable events as much as we can by exchanging.
Yep. It's just a big game. And that's where I could see, you know, this creative financing coming into play, particularly for people that have maybe big tax burdens, you know, guys that have sold businesses or sold some real estate that had a huge capital gains hit, or estates, where right now what we're seeing a lot, at least here in the Kansas City area, a lot of elderly own large portfolios of rental properties or ground or whatever else, and they're either selling it or have passed away, and now their family is getting burdened with these huge tax bills, and it hurts. And this creative financing, doing something like you're doing, you would be a key person for somebody like that to speak to. Is that not right?
Right. Now, so when you inherit a property, your tax basis comes up to the value of the day you inherit. So then you can sell it without paying the tax. So one of my favorite formulas is when you meet the older people and they want to sell, you say, no, why don't you just keep it? You keep it. We'll buy an option. We'll manage it. We'll send you a little money every month. We'll take care of it. And then we'll just buy it from your heirs.
Yep.
Don't want your heirs to get all the money tax free. And then some people go, no, I want my money now. I don't care anything about my heirs. My kids have plenty of money. Well, then that strategy didn't work, right?
Yeah.
So you have to listen to the seller to find out what they really want. But most people that don't really need the money, they would rather their heirs or their church or their charity receive a bigger payday after that from their estate.
Absolutely.
So we'll just option the property to let them keep it. Then we'll lease it from them and then sublease out, earn the cash flow. And then we'll exercise the option after, from their estate. And at that point, the estate gets the money tax free. And the longer they live, the better, because, options are the bee's knees.
Yep.
In real estate world, because it's so inexpensive and you're riding appreciation because you're fixed, your value is fixed and appreciation is on your side, especially if there's a loan, because most of the time we'll make our option strike price $100,000 over first mortgage. So we'll even have a little bit of that mortgage payment going down, appreciation going up, and there's a lot bigger payday percentage wise with options. So we use options, we use leases, we use paper, we do exchanges, we just don't syndicate, and we don't do banks.
That's interesting.
So the rates have gone up. It hasn't affected my business. It's made my phone ring more.
If it were a depreciating market, obviously nobody wants that. Nobody hopes for it. But we've had such an appreciating market for the past 4 or 5 years. If we did see a little bit of a depreciating market over the next couple of years, how does that impact you and what you're doing today?
Well, it would make it easier for us to find more deals. We would be targeted in our holds more. We're still using the same strategies that everybody else is in determining values on stuff that we keep. I mean, if there's more people living in that market this year than there were last year and the year before, there's a good chance the values are going to keep going up or at least stay the same. So we had a guy call us about I forgot where it was now, but the population is shrinking in their market. And for me to buy and sell that's fine. But for me to buy and keep, that's not something that we're going to do. We're going to look for the markets where the values are, where the people are moving. Yeah. So that's people drive the
Always.
Yeah.
In all
And the
markets. I mean,
jobs,
that's the
and the
reality.
jobs follow the people / vice
Yeah.
versa. So here in South Carolina, people are moving here faster than
I mean, Greenville has blown up. You are in a good spot.
we are.
That it has absolutely blown up. There's a lot of industrial stuff happening in industrial development going on in Greenville. You're right there on the is it 85 or I-80 corridor? Is that right?
We are 85. We're about halfway between
85.
Charlotte and Atlanta.
Yeah.
BMW's headquarters is right here. They make all the X3s,
Yep.
4s, and 5s. And they just announced that they're building a plant to make all the batteries. So that's driving even more jobs. And
Jeez.
so it's just exploding in our market, just like a lot of other markets in the Southeast.
Yeah. The SEC is where we're always looking. We always say, hey, when we're looking for ground or development, SEC country, put us in the Southeast Conference, somewhere down there, because that's where most of the population's tending to move right now, it seems like.
Yeah. Well, it's easier to find a cheaper place to stay, and
you got a lot of industrial going. I mean, the hubs down in Baton Rouge and a few other areas. You got all the shipping containers coming in down there. Now Florida's talking about opening up bigger port as well and trying to get more coming through there versus California. So it's going to be interesting over the next 10 years to see what happens on that corridor.
It makes a big difference. We have an inland port here in the upstate, which is basically the shipping containers that you can stack up and then rearrange them and then put them on the train and get them to Charleston.
Mm-hmm.
It's an inland port. So if you ship something from anywhere in the world and you're in Tennessee, you're going to send it here first, or or it's going to come here first and then get on a truck to go to Tennessee, because we have that inland port, and that we've had that for about 10 years. And then of course it explodes all around it, all industrial, and that drives the jobs, it drives the housing, that drives the retail, everything just grows all around it.
Yeah. Are there any particular niches that you are seeing in the coming years that will benefit from creative financing, in your opinion?
Well, the fine subject too is creative, but I think a lot of people know how to do it.
Yes.
And we've done that probably, I don't know, 100 times in my career, even when we've done them with warehouses and multifamily.
Wow.
There's going to be opportunities because the rates have gone up. There's going to be people that struggle to make their payment, and you're going to have lower interest rate mortgages that are just sitting there waiting on somebody that knows how to buy subject to the mortgage. They can just step into that mortgage. So I think that's going to be an opportunity. Anytime it's bad, it's good for us. Good times is harder because if the times are great and you want to go to cash, it's like selling a stock. If I want to sell my Bank of America stock today, I just point, click, boom, it goes to cash. Real estate has been that way for a long time. I got $1 million bill and I want to sell it. Well, it's not point and click, but within 2 or 3 months, it's $1 million. Now you can't it's not liquid like a stock. Now, a stock that's trading for $10 a share, I can't buy it for $5 a share. But that building that will appraise for $1 million, if the seller gets in a bind and the roof's leaking and their balloon payment's coming, I can buy that building for $500,000. So I own real estate because I'm buying at discounts or with terms.
Yep.
And I can't do that with stocks. I can buy a call with a stock and hope it goes up.
Yeah.
But
exactly.
But it's going to expire. Whereas when I do that in real estate, I can buy one that's going to roll. We can roll our option forever.
I love it. Just constantly rolling it, playing with the puzzle, moving things around. It is a very unique niche that you guys are in. I have an example or a question for you then. I've got a client. They have a commercial building. He owes nothing on it. He would love to sell it, but he's got a price on it that's, I want to say it's crazy out of line, but it's up there, top of its point. But he would really just like to create the cash, I believe, and quit dealing with the tenants. There are 2 of them are occupied. There's 2 others that aren't currently. say he wanted to sell it for $1 million. What would you advise somebody like that to do, or how would you?
Why does he want to sell?
He doesn't want to deal with the tenants anymore, and he would just like some of the cash. He doesn't need the cash.
How much does he net right now? What does he get to take home every year?
About $65,000 currently, and it is under rented.
And that's after taxes, insurance, maintenance, repairs, vacancy management.
Yep, correct.
And what is $1 million the real price he wants for the property?
It is.
Okay.
It's actually like $979, I think, but $1 million makes this easier.
But this 65 a year, he may or may not make that if the tenants don't pay.
Exactly.
Right.
Yep.
So if I could give him 50 grand a year, no matter what, for sure, and secure him with something that's worth $2 million. The reason why he wouldn't take something I can exchange him into that's worth $2 million, but he only gets to make 50 grand a year. You think any reason why he wouldn't do that?
I don't know. I guess he would likely ask, okay, what are my tax implications? Because if he sells that for $1 million, but he's not selling this.
No, we'll exchange him. What do you think his basis is?
Oh, dirt cheap. He's on these things for 50 years.
Yeah. So he don't want to sell them and take the hit. So we'll exchange him into something that we have for the $1 million. Then we'll master lease it back for 50 grand a year. And he'll make 50 grand a year just by mailbox money. He still owns the property of something free and clear. If something goes wrong, he already owns it. Hopefully we'll find him something that's worth more than what he owns that makes it safer. Because a big benefit to the older folks is safety. I would rather have 50 grand a year and own something worth $1.5 million than maybe make 65 a year on something that's not worth $1 million. You just told me it's not really worth $1 million.
Yeah, it's probably worth a little bit under there for sure.
But what do you think it would sell for? All cash.
Oh, high 8 probably.
Okay, so let's say I could get $850 for it. If I sell it for $850 and I'm paying you 50 grand a year, am I not borrowing cheaper than bank rates?
Yep.
Or right at bank rates?
Yep. Yeah,
That's
a good point.
kind of offer we would make it. And we wouldn't negotiate price. We would negotiate our payment, our annual payment.
Yep.
And he needs to be, the benefit he's seeking needs to be safety and no management. Otherwise, I wouldn't make that offer. So I would ask him 20 questions and find out what he's trying to do. Why? Why are you selling? What would you do with the cash if you had it? Is there going to be a big tax if you sell it? All kind of questions to try to figure out what the smartest strategy is to get him where he wants to go. And it also gives me a benefit.
Yeah. Man.
So you can make that offer. And
I will definitely put that in front of him. That is a very...
What is 5 divided by 8.5? If that was an interest only payment, which is just like a triple net lease back.
Yeah.
I just borrowed money at 5.8%. That's my cost of money. If I can only sell it for $850, does that make sense? So
that makes
traded him over. I sell it for $850. I've got $850. I'm paying him 50 grand a year, interest only, with a balloon coming out in a long time. See, in that scenario, I've got to wait and buy it back from him a long time from now. But in the meantime, it's only costed me 5.88%, which is cheaper than banks today.
Yep. Wow.
And it gives me the cash to do the next transaction. So what we're doing is we're raising cash to buy something in front of us that we own free and clear, that then we can put somebody on or sell it to them and stabilize it. Well, then we raise cash on what we bought from them, buy something in front of us that we own free and clear. And it's just
keep going. Holy moly. Let's run another scenario. So, okay. let's say that I have $2 million worth of rental properties. Okay. They're multiple residential properties. I owe about $1 million on them. So I've got about $1 million in equity, bringing in $15,000 a month. After taxes, everything, probably bringing in $8-ish thousand bucks a month. After management, taxes, everything else. What would you advise? Or if I
What
wanted
about the debt?
to,
Does that include the debt service?
including debt service, everything. Yep.
How much of that 15 is debt service?
It's a note on it. It's about 7. Hang on a second. That doesn't include debt service. I apologize. It would be, and I'm just making some of these numbers up, but it's somewhat of a real scenario, to be honest. So it would be debt service of about 7,000 and then another 5,000. So the cash flow would only be about 4,000 a month, I believe.
Okay.
3,000 to 4,000 a month.
So
Cash
here's
flow.
what I would do if I was, let's assume you're the owner.
Yeah.
So how do you feel about making 3.6% on your equity?
Personally, probably wouldn't take it.
Okay. So you're making $3,000 a month. You got $1 million in equity,
3.6.
36,000 a year. I went to
Mhm.
Clemson. So can you get a calculator out and do the math for me? I don't understand. Let's see here. Yeah. 36,000. You like earning 30.6% with your equity. That's what you enjoy.
No.
Well, let me ask you a question. I don't know if I can do this or not, but I think I could exchange you into something that's going to pay more than 36,000 a year. We could probably get it up to 46,000 a year. Any reason why you wouldn't do that?
No. We'll
Okay,
probably
we'll
do
whip
it
out the
tomorrow.
contract. You whip out the contract.
Well, I
See,
might send
I
you
just-
over a
I just-
contract.
You just fell into
That's
a
crazy.
strategy that I like to use. And that now, if you're if you're self-managing that and you're trying to grow wealth, then you won't take my offer.
Yeah, that's the big difference.
If you want to get off of management and you want to maintain cash flow, that's an awesome offer I just made for you.
Yeah, it really depends on what your goals are, right? Cash flow. A lot of people, it is cash flow, and that would make way more sense. You would increase your cash flow by, 30% doing that. That would be pretty
but
damn
you
good.
but you're going to lose your appreciation because
Yeah.
I'm going to have a buyback on where I take you.
Yep.
So if
And-
you're trying to grow it, let's assume that I ask you the questions and you're going to grow your wealth. Then I
Mhm.
would ask you, to what extent can you add more cash to this package?
Okay.
Or to what extent can you borrow from a bank? And
Yeah.
then what I would do is I would ask you to go buy something in the 4 million range with $1 million down. So you
okay.
you actually trade your $1 million in equity as a down. Let
To
whoever
trade up.
takes that sell them and go to cash.
Mm-hmm.
And then you go up to 3 million debt, 1 million equity,
Yep.
raise your cash flow because you just got bigger. So you got
Wow.
bigger, you raised your cash flow, you raised your appreciation. Appreciation should be more. Headache and management should be more, maybe, unless
Yeah.
you do something triple net. So
That's
it's
what we're talking about.
all about benefits. Benefits and obligations. If I can
I think
give you less obligations and bigger benefits, you'll probably take my offer. If you're
Yep.
still growing and you're young, the offer I made to give you a little bump in income, it's not a very good offer.
Yeah.